Hello, my Life with Crypto brothers and sisters. Welcome to another Money Monday training. For today's topic, I'll discuss part 3 of how to pick quality cryptocurrencies using fundamental analysis. Part 3 covers blockchain metrics, which is also known as on-chain metrics. In case you missed parts 1 and 2, you can find them in the guide section of our Facebook group. And here's a quick reminder of what I covered in the prior parts and what I'm going to be covering in the next part. So all 4 parts of the fundamental analysis training include macroeconomics, project metrics, blockchain metrics, and financial metrics. And as always, if you have a topic that you'd like to have me cover on one of our Money Monday trainings, just please leave me a comment in the comment section and I'll do my best to get a training for you. Okay, let's get started today. This third group of fundamental analysis factors analyzes on-chain data to determine investor behavior. We call it blockchain metrics. This data is provided by the blockchain where the crypto or token resides. For example, Bitcoin resides on the Bitcoin blockchain, Ether resides on the Ethereum blockchain, AVAX resides on the Avalanche blockchain. From a high-level perspective, here's some things that we might research in regards to blockchain metrics. The transaction count or on-chain activity, transaction volume over a specific time frame, the number of active addresses in a given period of time, the hash rate for proof-of-work blockchains, and the amount staked for a proof-of-stake blockchain. Now the question is, where do we find this information and what specifically do we look for? Well, let's go through this list and get into some specifics. Keep in mind that when doing your research, you're looking for red flags. Too many red flags means you might not want to invest in this particular asset token that you're looking at. The first metric is called transaction count, and this measures the total activity taking place on the network during a given period. And by looking at a graph of this data, you can see whether the activity is increasing or decreasing in comparison to the price. Now, this is a sample that I took from one of the service providers where you can gather blockchain on-chain data on blockchain metrics. And this is showing us the number of transactions on the Bitcoin blockchain. And what I find interesting about this chart is that towards the end of the chart, during the time frame July through September, the transaction count has stayed very steady compared to last year in 2021, and yet the price has come down. What that tells me is the activity has not decreased, but the price has. So it could just be, fear, FOMO, people are not fear of missing out, but fear, meaning that people are worried about the prices, but there's still just as much activity on chain. So that tells me I would expect the price not to stay down. So let's go on now. The next metric is transaction volume, which is the dollar amount of crypto assets exchanged between addresses. So take the total transactions for a day and multiply it by the dollar value of that crypto asset. Going one step further, you can divide a coin's market cap, which I'll cover in part 4, by the daily transaction volume to gain insight into the network value to transactions ratio metric. And this metric can help determine whether a particular asset is overvalued or undervalued. And if you don't really understand what that metric is, don't worry about it. There's lots of things to look at, and that is a little bit of an advanced thing to look at. Now let's look at the number of active addresses in a given period. And this metric shows the number of active addresses on a given blockchain network. While it doesn't show precisely how many users there are on a network, it does show the number of addresses used by exchanges, miners, and individuals. Historically, active addresses correlate with price, meaning the more active addresses there are, the more potential for the cost to increase or the price to go up. Why? Well, because crypto assets that attract more interest have more significant growth potential. Another blockchain metric to consider is what about the hash rate for proof-of-work blockchains? Hash rate measures the amount of processing power that proof-of-work miners generate to secure the network. Overall, the higher the hash rate, the more secure the network is. Additionally, the hash rate reflects how fast a block gets created on the blockchain. The faster a block gets created, the more crypto a miner earns. If a blockchain has a low hash rate, then that's a sign that there's not very much adoption for that blockchain. What about the amount staked for proof-of-stake blockchains? The amount staked measures the security of a proof-of-stake network. The more crypto that gets staked, the more secure the network is. Also, as more validators process transactions, the greater the interest in a particular cryptocurrency there is. And this translates into a crypto asset being a worthy project for investment consideration. Again, the more interest there is in a particular blockchain or a crypto on that blockchain, the more probability there is that that project will stick around for years to come, and the price will more than likely go up as we get out of a bear market. Well, in summary, I know that that's a lot of information, and I didn't show a lot of graphs because some of the places where you gather this information are paid services. And some of those paid services will provide you some free information, and some of it you'll have to subscribe in order to get the data. But doing complete fundamental analysis of a crypto asset is a great deal of work, but the time spent can be well worth it. Knowing specifics about a project before investing can save you money. So as I said, where do you find this blockchain metric data? You can find this info from blockchain data service providers, and if you're savvy enough, some of it you can find on actual blockchain explorers like Etherscan. And every blockchain has a blockchain explorer. It's where you can go look at all the transactions on that blockchain. For service providers, some data, as I said, will be free and some will require a paid subscription. And below is a list of some of the blockchain data service providers that I know about, and many of them I've used. Glassnode.com is where I got that one chart earlier in this training. IntoTheBlock.com is another service provider. Messari is one that I use for a lot of free data. Nansen is another one. Santiment and CryptoQuant. And you'll have to go check these out and see which ones you like and which ones you may want to get your own subscription to, and you may not. And this is a reason why we tend to follow experts who do this kind of analysis, because it's a lot of work and you have to pay for some of these subscription services in order to get the data. So it's good to have experts in your back pocket that you can follow to gather some of this data in, but it's also good to do some of the looking for some of this data yourself, because you want to learn a little bit about on-chain metrics and what they mean. So that's about all I have for today's training. I appreciate you joining me. And as always, if you enjoyed today's content, please put a 1 in the comments and share your thoughts. See you next week. Bye for now.